Good morning. Welcome everyone to Admiral Markets webinar, where we take a look at the live charts, live market conditions. But before we actually take a look at that, let me share with you this PowerPoint that explains certain key elements, such as this disclaimer. The material here is intended for a global audience. Please take into account that the info in this session may not be suitable for everyone. To get the corresponding info on charting conditions and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, the risks involved in trading foreign exchange and global financial markets and products is considered high risk and may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only, and by continuing watching this webinar, you agree with this disclaimer mentioned here and on the website, and we do thank you for your attention. Okay, today we're going to focus on moving averages, as the title of the webinar already indicated. What that means is that we will be using this tool as our primary method for identifying and analyzing, but it doesn't mean that it will be the only tool. Also, don't forget that we always use this checklist, trend, opportunity, filters, trigger, entry method to understand if the market is doing something that makes sense for an entry. All right, with that said, let's take a look at the calendar this week. Yesterday we had the last day of the month. We also had the last day of the second quarter and the first day of the month. Today we had a Aussie interest rate decision which stayed at 2.5 plus a rate statement connected to that. We have German PMI in an hour and pound PMI in an hour 40 minutes and USD PMI in 7 hours. But otherwise, we do have some interesting things going on this week. Let's take a look at those. Tomorrow, we have ADP. But that's still a light warming up news compared to what we could expect on Thursday. Thursday, we have services PMI pound, but more interesting, we have Euro interest rate decisions, Aussie retail sales, the unemployment rate in the U.S., plus non-farm payrolls, and the ECB press conference, plus USD PMI. Now, obviously, the interest rate and the non-farm payrolls is going to be the most interesting ones, and the highest of the most important ones, news events you can ever have, actually. So, especially the NFP, obviously, is the number one. So that's on Thursday. Why Thursday? Because Friday there's a day off in the U.S. It's the 4th of July, which means it's Independence Day. That's why it's on Thursday instead of Friday. So be cautious and aware of that. That's one day earlier than usual. So Thursday and Friday could be a bit strange trading, difficult trading. You might want to avoid those days. Friday because of the day off, Thursday because of the high impact news. So today and tomorrow seem more suitable, therefore, but be careful of today with the pound. It's coming close. So today we're going to take a look at moving averages. Let me open the question box, see if there are any questions. Any views on German PMI? No idea. I really don't look into these Reddit tagged events, what they could be, or what is expected, or what might be likely. So I would be a bad person to answer that, unfortunately. But technically, the euro dollar looks bullish, in my opinion. We finally had the break to the upside. Took ages, but finally happened. Took 16 days to be precise. Yesterday was the 17th day. That bullishness seemed likely to me already after the daily pin bar here, but just took very long before it happened. We had a retracement first. Then we slowly but surely started to build on this uptrend channel. For those that maybe saw the video analysis that I post on Mondays on the Admiral website as well, you can see it by going to daily wave analysis, and you will see it there. Go to wave analysis. Weekly overview of Euro, AUD USD, and Pound USD. Anyone who read that, or listened to that, I should say, knew that I was very bullish on the euro dollar and pound dollar. looking at price action, looking at this channel to the upside, looking at this base that is being built to the upside. And basically, that's why that was, the main reason, looking at price action, the weekly chart, for instance, pin bar, retracement candle, bullish, bullish. So it looks like the breakout was imminent. Daily candle, we had this base here. So anything that stayed above the weekly low of last week, which is 135.75, bullish. Today, same story. I would say we have bullish candle that close very near the high yesterday, which means that basically we have bulls in control, just like Friday was also very bullish, or was this a Sunday candle? I'm not sure actually. That's a Friday candle. So basically this was very bullish setup here, and we got that continuation. Same thing today, basically. Still that bullish candle lingering. Now, it doesn't have to find a continuation today. It could be tomorrow as well. So we have to be careful not to jump in immediately, because who knows? Today could be just sideways, and tomorrow we get the follow through. We never know. But you can see, looking at the moving averages here, when price boxed away from it, then back away, back away, back away, it was bullish. The moving averages I use, basically, it's various moving averages. I use quite a mixture, but they're all fib numbers. And I do tend to use 34 a lot. I use 21 a lot. I use occasionally 35 and 8 for very short-term movements. 21 and 34 more for intermediate. And occasionally even 89 or 144 for very long-term, or if I want to see the trend on a higher time frame. So if I would want to see on this hourly chart the 34 EMA of the 4-hour chart, I would use roughly 144 to have an idea what that looks like on this time frame. But they're all fib numbers because I think they're very, very useful. But I saw a study that I mentioned last week, and I think it's useful to repeat in today's session because it's focus on moving averages. Last week I discussed it already, so apologies if you already know the statistics, but I want to repeat it one more time at least. I saw a study that looked at the best moving average combinations. First of all, EMA was better than SMA. I'm talking about daily chart, but still, probably what is valid for the daily makes sense on lower time frames as well, because the market most of the time is not most of the time, it is fractal of nature. So EMA better than SMA, and the best combinations were of EMAs such as, for instance, 10 to 30 in combination with 30 to 50. So anything like a 1030, 1040, 1050. Well, 1030 was not the best one, but 1040, 1050, or 1530, 2040, anywhere in between. So just that you have an idea. Those are the best statistics. We went through the details last time, but this is the rough summary, okay? The quick summary. So we also have pivot points on this chart, as you can see, and the moving average is still bullish. They're flattening a bit. That is true. The 4-hour, though, certainly still well up. These are 21 EMAs, by the way, that are in the chart. Close, high, and low. So that's why you see the band of 3. Haven't used those in a while, but we used to use those all the time. So I'm just going back to that. They are very useful. We're using 2 EMAs just to make it a bit simpler, but I like the 3 sometimes because it just shows you, it has more footprint on the chart, right? It has more, you get a bit more feeling for the angle. If there's only one, let's say we take away these 2, it's still a bit different in how the vibe of the currency and the momentum looks like. So I wouldn't be surprised to see actually a bounce off of these moving averages We are flat, so we have to be a bit cautious, but we also have a daily pivot point and L3 already as support levels. So that could be a bouncing spot. Let's take a look at the 15 now. 15, you can see moving averages are bearish. That's because we're getting a pretty long Asian consolidation where price has managed to break below it. What I would like to see preferably, obviously there's always the potential to look for a turning spot here. That's nothing necessarily wrong with it. That could be a good first early potential entry, but the confirmation entry would be if price manages to poke through the moving averages, hook back, and bounce. Or if price breaks further, something like that, right? Depends exactly how far price can break through those moving averages. That would be a confirmation entry on these moving averages. So price would need to break through this band first. Make a pretty good move up, hook down, either bounce, take the bounce, or the break. Those are potential setups. Let's see if there's something that could be traded right now. The euro dollar doesn't have that regarding the moving averages. The moving averages are not aligned on the 15 and hourly as yet, but they are close to. So that's why I'm talking about the future. So there's nothing we can do about that. You know, we are dealt the cards that we are dealt are the ones we have to use. We cannot ask for a new situation. So this is how the euro looks like. This is what we have to deal with. Now there's definitely that bouncing spot potential here, but the moving average on the hourly are flat, which means that we have to, for a real confirmation, we'll have to be a bit more cautious. It could be an early entry, as I said. The hourlies are making lower lows and lower highs. Personally, I'd rather wait for a break above these moving averages. Let's see if the pound dollar looks a bit different. Same story, in fact. Also looking very bullish. As I said in the video analysis yesterday, why was that? We talked about it last week too. There's no divergence between these tops. So what did we say? The break of this top, because there's no divergence, is very, very likely. Right? Because it was a strong move up, there's not so much likelihood of a deep fib. So we were looking for the 38.2 bounce. It missed it by a bit. But in any case, everyone was prepared for the fact that this top was probably going to break. Of course, an entry is a different story, but at least you have the right directional guidance in mind. That's always important. Alrighty, so now we're getting that break again. Do we have divergence now between these tops? We didn't have it between these tops. Do we have it between these tops? Some might say yes. Some might think, yes, there is. Right? Because this is looking like lower, lower, lower high, and price is making higher high. But the thing is, we cannot compare as yet. This has not stopped yet. The AO, this oscillator, is still building higher and higher. Only when we have 3 red candles, 3 red histograms, I should say, could we consider the first time that there could be a potential divergence if it, of course, is so that this is lower than the previous top. Hope that makes sense. So we don't know that for sure. We don't know at the moment. All we know, though, is that there is no divergence between these tops as yet. So we have a nice channel going on to the upside. In fact, for our very bullish moving average angles. Let's see. You guys saying SH shoulder head shoulder pattern is fulfill 80%. Not sure what you mean with that. Could you specify it a bit more precisely? I think what you mean is that there's a chance, 80% chance maybe of a head and shoulders pattern now, but I'm not 100% sure. Moving averages here bullish. And prices move back to the moving averages. All right, so there's that bullishness as well. We don't have any divergence between the hourly. So here too, just remember, like the 4-hour, there was a very high chance of this top being broken because there was no divergence. That same concept can be translated into the hourly. You see these tops here and these tops, there's no divergence between those. So I know that a lot of traders were going short against the pound dollar for a very long time. But already here we were saying, look out, this is an impulse, this is momentum, this is looking, if there's a bull flag, it's going to break, again break, bull flag, break. So all of these shorts, well, not all of them, but most of these shorts had probably losses. It's not easy to find reversals. And it's very natural, it's very easy maybe to think about reversals because it gives a tighter stop loss. And I think that, I don't know, somehow mentally it's probably easier to look for them, I guess. But you can see that many of them fail. There are some of them that worked, but you really have to be very experienced to catch these few pips here, or maybe these few, and not, get caught in excitement and actually lose the trade. It's difficult, only if you're very experienced. So that's why if you're more newer in trading, I recommend to look for with the trend trades, because you got the power of the trend pushing it in your favor. So the timing of the trades is not as important as with reversals. Reversals, timing is essence. In whole trading, timing is very important, but especially with reversals, more so than even with trending trades, depending, of course, how tight a stop loss one would use. But anyhow, still bullish, no divergence on this hourly chart, so still looking for follow through, like the euro dollar, to the upside. So as soon as these moving averages on the 15 get bullish, there is one more, or probably two more breaks of the highest possible, because we don't have divergence on the 15 either. So what you probably see is a break, pullback, break, and we get double divergence, and that's when we might expect a bit more pullback. Now, nothing is a guarantee, but this is statistically more likely. Like yesterday when this was making a bullish structure. Look at this moving average, very bullish. That was a great breakout trade. Great. And now it's making a bull flag. To me, that doesn't look like a head and shoulders, because there's a head and shoulders would look like this, for instance, right? To me, that looks like a head and shoulders or weakness. But now, what is happening now is actually just a thrust and a flag. So that's why I don't consider it. Right? That's the difference between the head and shoulders and the bull flag, in my opinion. The green and the blue here. There's no divergence either. Usually when you have head and shoulders, you have that divergence pattern as well, by the way. All right? So you would see on the oscillator, you would see something like this. Like that. That pattern we don't have as well. So these are clues that is not so likely statistically. Nothing is 100%, but we could act with decent confidence statistically that this is so. At least, to put it cautiously, this is how I look at it. So, yeah, same thing actually as the euro dollar. Odd USD. Yeah, odd USD got a spike to the upside probably during that odd interest rate. It would be funny if it wasn't, but I would assume so. However, it was only actually, when was that Aussie interest rate? Yeah, that was 5:30. This looks like GMT time, which is 7:30 my time indeed. 7:30. Yeah, this must be during the interest rate. It would be funny if it wasn't. So the spike up interest rate move, and let's see. We're not sure if we have divergence because we don't. This is not finished as yet. It could be so because we haven't broken this top as yet. Bullish moving averages here. Pivot points below us. Broke through a big top right there. Big resistance. And yesterday's video analysis was saying this is a chance of being a ascending wedge, which now we can see it has that potential of being an ascending wedge. However, we still have to see, of course, how today's candle closes. Yes, we did have a big pin bar yesterday. Today is getting a follow-through, but it would be good to see how today closes in relationship to the high, to see if bulls are in control. Bulls were in control last week, maybe slightly indecision before that, but control before that. So continue with that uptrend. So looking bullish. Personally, I think that I would like to see a retracement, maybe to square up part of that candle, hook back to the broken top. That might not happen, but if it does, it would probably be the best for trading. Because if one trades a breakout here, you're running into the R2 already. Actually, we're at the weekly R1, and that would seem a bit risky. So that's not something that seems too appealing to me. Waiting for retracement on the Aussie and follow through might be the better play. But the whole news event is making it a bit more difficult because it had such a big spike up, slowly moving up like that. Therefore, this side would be very dangerous because it's countered the news event. This side is dangerous because it doesn't have much space, so it really doesn't look that well situated at the moment, at least. Maybe later today if it does retrace and bounce. Let's continue. Let's see. Very bullish moving averages on the daily. Very aggressive. 4-hour is flatter. One second. Let me make a quick change in this template. Sorry for that. Bear with me. Alrighty. Thanks. Just a quick change there so that we have this set up correctly. So, yeah, this is nothing special at the moment. It does have maybe a bullish bias looking at the hourly 15.2, but overall it's been quite choppy with some shooting stars here. It's definitely struggling to find the follow-through. Doesn't have to mean that it always will stay like that throughout the day, but at the moment doesn't seem to be willing to break. But if it does break above these levels, that could be a breakout to the upside. It is bullish, so that would make sense. Other than that, there's really nothing else to add, in fact. Dollar CAD, let me take a look. Could be interesting, different point of view, but if price gets up to this weekly pivot, that could be an interesting reversal, not a reversal, but a bounce, rejection area. We got a top here. It's not really anything to do with the moving averages, but we have a top there plus a weekly pivot and a daily R1. That would seem a very interesting level to, if it does get up that high, to look for rejection. That could be very interesting. Other than that, let's see. Let me put on these moving averages on the hourly. 1 second. If it doesn't get up that high, because this is still a bearish structure. If you look at the 4-hour chart, you see it, right? Everything is pointed down. So obviously there's a point where there is a potential reversal possible. Is that moment right here, right now? Maybe. There is no divergence between these bottoms as yet, but we do see that the AO could be heading back to the zero line at the moment, which means that this could retrace, keep going sideways, and then make a fall later on. So that's something to be cautious of. We can see that the hourly does have divergence between these bottoms. So in that regard, the breakout to the downside below these bottoms is risky because it does have divergence actually. Probably double divergence actually. So no, it's not to say that the entire downside is as yet over necessarily. No, because the moving averages and the oscillator are very bearish on the 4-hour. That doesn't necessarily change, but the hourly is showing signs of exhaustion. Therefore, yeah, I would be careful. There is probably a high likelihood of going sideways, and then the AO on the 4-hour chart will go to the zero line, and we'll probably see then a follow through. But that's probably going to be interesting maybe tomorrow or Thursday. Today seems, therefore, looking at that point of view, risky. Not to say that maybe a rejection at this level wouldn't still not be interesting, but a breakout is different. That's something. No, be cautious of that. Let's see if there's something else going on that could pickle our curiosity right now. In fact, instead of waiting for something to happen, let's see. Dollar yen. Got a bullish break above these moving averages. This is already looking bullish, not necessarily because there's a big bullish trend going on. No, if you look at the daily chart, price is flat. The moving averages are flat. Price is bouncing up and down, I should say, around those moving averages. So no, not because of that. But one thing is true, though, is that price is close to a support level, and it's bouncing off a fib as well if you put a fib from the bottom here to the top. Let's do that. Right there. So this could be a correction finished, and we make another correction up. Problem is price is boxed in between the pivots, which is not so pleasant. So it's not really a very nice environment. It's 4-hour down, hourly is up, daily is flat, prices between the pivots. you can probably understand why I'm not really jumping for joy to trade it because of that. See if the euro yen is better. Well, it's overall quite range on this 4-hour chart. Daily, it's just almost funny to see it, but if you look at the weekly, for the first time we've actually have bearish moving averages since all the way here. So that was a long upside that recently has came to a halt. Now, not necessarily does that upside mean it's over, but it does show a prolonged sideways triangle maybe here, or lack of follow through, whatever it is. It's not trending that much on the daily nor on the 4-hour. It's making a lot of bounces up and down basically. It's quite choppy. The yen is not really a good trending pair, but the hourly does show a very good angle. So in that regard, there could be potential. Probably because the euro dollar is moving up. The euro is moving slightly up against the dollar, for instance. That may be why the euro yen looks a bit better than the dollar yen. Therefore, if you look at the smaller time frames, they do show a bit more potential than the higher time frames. Yeah, this is looking interesting because at least there's that 1-hour bullishness, and even the 4-hour has an angle, which is good. We have the pivots all below us, totally different than the dollar yen. We had a follow through, retracement, and now getting a continuation, a break. Sorry, continuation, pullback slash continuation now. So one more time. Sorry, I'm mixing up the words. Break, pull back, continuation. Yeah, this is one I would like to check 10 minutes from now. If it does close above these moving averages, if you look at the 3 MA, it's above the 8 EMA, for instance, that's showing, that's signaling short-term momentum compared to, let's say, the longer one of the shorter moving averages, right? The 8, 3 versus 8, 3 versus 8. Yeah. And price could be closing above the 21 EMA on the 15-minute chart, and the 1-hour is very bullish. So that could be interesting. You can see also tweezer bottoms if you look at price action. And we're engulfing last hour's candle, so something to think about. If the 50-minute chart does close, doesn't have to be necessarily right away an entry there, but could be worth taking an entry upon the pullback or upon the break of this top. Let's take a look at 8 minutes. Pound yen, does it have the same? Yes, it is bullish. Roughly the same indeed. Price is not moving up at the moment though. Plus the pound news event is pretty close by. But I think the euro too, let me take a look. 32 minutes. So that might be worth being cautious of, but especially the pound is something I don't like to trade, but be aware of the German PMI as well. Odd yen traveled already a lot. It's hitting the H5, so that seems to have already passed its moment. Pound odd. That's too choppy for me. Moving averages are especially useful as a reversal or as a trending trade setup, not so much necessarily as ranging environments. So if there's a ranging environment, I don't think moving averages are that valid or that important, unless of course there's such a big daily range that, and you're trading in hourly, then obviously when price falls from one top to one bottom and then rises from the bottom to top, on the daily chart, that range could of course have good 1 hour moving averages in between those levels, right? That's something different. So 7 minutes to go, and I'll take a look again at the euro yen. Euro odd is the same, too choppy. Euro CAD is actually bullish on the 1 hour at the moment. After we had divergence between these bottoms, overall it's close to the resistance too, so I'll be cautious of that. But let's see. If anything else is going on that's worth reviewing. Maybe XAUUSD quickly. We are getting follow through to the upside after this big consolidation. Follow through, hook back. Very, very big consolidation, in fact. As we said, it's looking bullish. Why? There was no divergence between these tops. Therefore, the break of this top was very high chance when we go back to that zero line of the AO. And well, we just did that. Obviously, it didn't break by much, but we did get the break of that top. As expected, that's the minimum. Let's see if we get a bit more out of this XAUUSD to the upside. Probably we will. Sorry. There is a bit divergence between the hourly, maybe, but if you compare more recent tops like these, then we don't have it actually, only with this one. So I would say there's a fair chance to see follow through. This was a big momentum, so that is pretty likely. So euro yen seems to be the only one, and pound yen, but actually the euro yen is the only one that is placing itself from the 15-minute moving average point of view into something interesting. So yeah, that took about 40 minutes, I guess, not all too long, but maybe longer than some of you are used to. So, but that's okay. I think it's good. It's early in the day. We still have news events. It's better to be waiting for your trade plan to unfold instead of trying to force something of an entry. That usually, in most 99% of cases, I would say, or 95, I don't know, but doesn't lead really to the best trades. Oddcat, let's take a look. Thanks, Bob. I remember we were talking about that odd cat last week, but I don't remember what I said actually. Totally forgot, unfortunately. Doesn't ring a bell anymore. Um, Overall, this is not an easy one, I would say, because we do have an impulse up. We're getting downside, but it could also easily be a correction of that, or yeah, it's difficult to say. We bounced off the 38.2 fib here, broke above it, broke back below, and this could be a hook back for more upside, in fact. Let's take a look at the weekly. It'll be interesting because this could be a classical zigzag. This is a situation where a lot of things seem conflicting. Not much confluence, I would say, at the moment. If I look at multiple time frames, but maybe the lower ones will give a bit more guidance. That happens sometimes. $886 bounce. Well, there is a retracement possible now, indeed, but due to, I would say, what I would call a limited potential. I mean, this could fly down 100 pips, but I think the chance of that is too small for me to risk a reversal trade here because of the fact that we have support below it. That is a pretty decent chance of getting a bounce. The impulse on the Aussie is, I would think, too powerful to get a bigger reversal. What could happen is a small downside, but there's, I think, a pretty decent chance we'll get a bounce for one more higher high, if not more, but at least maybe up to weekly R1 with the monthly pivot here. That, for instance, is a confluence area that that would be a bit stronger. If price gets up to that zone, then you're talking about a bigger resistance that could stop the currency from continuing. That would be more pleasant. If you're looking for reversal trades, it's always good to find some extra confluence or reasons why a currency could move down. There is some reason here, but I would say not enough for me to be willing to risk a reversal trade setup, especially in light of the Aussie interest rate, which adds another kind of dynamic to it. So let's take a look at the euro yen now. The half hour just closed. Yeah, that looks bullish. Close bullish. So you can use moving averages like this very usefully as a support or resistance, for instance, as a trend, as momentum by looking at the angle, and even as a trigger when price breaks above it again. So they're very useful. So that looks pretty good. I wouldn't mind to take an entry order upon the retracement here. Would rather see this 1 hour still closed, something like this, than wait for retracement on the hourly about halfway to about this level, 138.86, with a stop loss below the tweezer bottoms. But that will be next hour. Or maybe even now. potentially. Let's see. I would rather wait for this hour to finish, to be honest, because the hourly. Let me check one thing here. One, two, three. This is the 5th hourly candle. Yeah, so there is a good chance that this could turn into a big wick, rejection wick. So I would want to see how this candle closes. Why this wick? Because it's the 5th one that is trying to break this top. And that's always a crucial one. If this 5th one ends up anything like a wick, then probably a follow through to the upside will not happen. Then I would rather wait for a breakout above the top. If it closes something like that, then there's a high likelihood of follow through, or there's a decent chance at least. That does change the dynamic. So yes, I'm glad to see the 15 above it. Now the next step for me would be the hourly to confirm that price can stay above these moving averages. Preferably go like, put another 2 candles here like that, and that would be the confirmation that price is, there's never 100% confirmation, but for me the confirmation at least, sufficient enough to say, okay, that hourly is bullish. There's a good chance that we'll break this top this next hour. Not this hour, but next hour. So the euro yen is probably the most interesting at the moment. Let's see the euro dollar and pound dollar too, but price needs to push above it. The euro dollar is doing that, so that's good. This is the direction that I would like to trade it to. Just have to show a bit more muscle still. It's staying above those moving averages. And you can see that it bounced indeed off those 21 EMAs like it did before. Some traders even take the bounces, but that has its risks because sometimes obviously you're trading it too early as price breaks through them. I'd rather wait for a bit more confirmation, but there are traders who do that. So here too, we want to see the top of the hour, how this hourly candle is looking. Is it indeed engulfing the previous candle? Or closing above it, I should say, with a strong close near the high? That's the usefulness of looking at price action in combination with moving averages. So that's the 50-minute world. Let's look at the hourly. Maybe there is some other things going on. This hourly could be a swing trade too, by the way, not only a 50-minute, but if the hourly is confirming the bounce here at the end of this hour or the next few hours, there could be that swing upside potential. Pound dollar too, in fact, although we are going into a potential divergence when we do move up. So preferably we want to see this back to the 0 line actually on the for swing trade, say like the euro dollar. Audio is the hourly. You see, the best ones are actually when they just break above the moving averages, like here, or they break and bounce again like that. So we're still a bit away from that particular zone, like the euro dollar 2, for instance, yesterday was a good swing trade as well, besides intraday trading. Euro yen is pushing up. Let's hope it doesn't push too much up, otherwise it will eat a lot of too much real estate. But in any case, the likelihood of the backup situation would be the break of this top. but I hope it doesn't push too much up. I want to see it close near the high this hour, but obviously I don't want to see it all the way up at 139.20 because then there's not much really left to trade logically. So, but we never know. I wouldn't want to take the risk of this still ending up in a rejection, so I'd rather wait 22 more minutes. And then if it does close something like that, wait for a small retrace. As I will wait for a small retrace, preferably, although we're not 100% sure if we get that, if it does close very, very bullishly. If it closes with a big wick, I'm not interested. If it closes anything like this or with a smaller wick, maybe like that, or even a bit more, that's still fine. The euro and pound out are quite choppy. This has a lot of moving averages. Let me reduce that for you a bit. Dollar Swiss looking bearish, certainly. And this could find more follow-through. This could be an interesting one too. Just like the euro dollar, obviously the opposite. Probably would rather trade the euro dollar, but dollar Swiss could be a good alternative. So, for instance, let's see. Yeah, just like the euro dollar here, a break below these bottoms probably would be something to look for. Plus, a smaller hook back maybe. Dollar Swiss doesn't move too much though, so that's a bit of a problem. Sorry. Let's take a look at this New Zealand yen. Maybe that will be giving us some opportunity. Daily very bullish. This is looking pretty good for bullishness as well because the New Zealand yen, because we are in an uptrend looking at the moving averages. It has broken already to the upside. This has gone back to the zero line. So this is a typical correction, three-leg correction, after which you normally get the follow through. So I know sometimes it seems like a lot has to happen before you get a confirmation. Maybe some of you are thinking, but this would be an example that would be close to that, in fact, because you have these things that I mentioned. Overall, though, I mean, there is quite a lot of sideways move on this 4-hour. That's a bit disturbing. Let's see, if there is a thrust following here and a small hook back, it could be worth it. Overall, though, I would like to see a bit of more confirmation as yet, because it does have good signs. Then again, if you look at the flatness of the 4-hour, it might be good to wait for that particular development. So a bit more patience if we get the bounce here or not, right? Because we're at the weekly pivot. You could see it as a consolidation or as a struggle. So we never know which one of the two it is. Sometimes we do have a bit more idea, but never 100%. XAUSD looked bullish to me, but we do have a shooting star here, and there's maybe divergence. I don't know. It still looks bullish. The question is only, I would say, from when could we see follow through as yet? And you can see 50-minute chart here. We bounce off the 38.2 fib. That would be a very logical bouncing spot, plus the 50 as well. So any one of these two, 1324, 1321, are places that I would say are logical for upside follow through. That's either here or a bit lower. Maybe even better this level right there. But we're not 100% sure if it can get there, obviously. But yesterday was a very reasonably bullish candle on the daily. Yeah, it was bullish. Sorry. So yeah, if it retraces back to the daily pivot, it would be a natural level for it to find support on average. Just to give you an example what you can do with moving averages, because now we're focused on right now, right here, but if you use the moving averages, for instance, for the trend, and you wait for price to move back to them and then move away from them, you get interesting potentials. Let me do one thing, 1 second. I know that moving averages can maybe seem a bit boring. At least I have always the feeling that the interest is lower when holding a moving average webinar, if I look at the stats. It always surprises me, but maybe it's just maybe not as interesting. But there is a lot of potential with moving averages. I mean, if you look at the ease with how you can use them, this is 21 EMA band and a 3 and an 8 for the shorter term. And you can do a lot of good things. Now, not always, of course, do you get the immediate follow through. Here, for instance, price hooked back to the moving averages, but you really want to see a bit of a trending mode. This is still relatively flat here. So when price moves below it as a confirmation, these would not be the best ones. You want to see probably a bit more angle to it. That becomes a bit better here when you get a move back and below again, and you do get the follow through. This could be another breakout here. You do have to go through retracement before you get the follow through. That sometimes happens. This one, of course, is ideal because we get a break below the moving average, a hook back, and below it again. You see the 3 stays below the 8. Here too, the 3 was below the 8. Price closed below the 21 band after hitting the 21 EMA band. Here too, by the way. Both of those are potentials. That's one way of approaching that, right? Same, not sure about this one. 3 and the 8 are close, but would have done okay. Here too. Rejection wick, 3 below the 8, or not. Let me check actually. No, it's the other way around. Sorry. No. Sorry, I got them mixed up. But this one did. Anyhow, this one was obviously the best one. Some the other ones we had to have a bit more patience before we got the follow through. Not always do I use a 3 and 8. It really depends. In this case, I might not use it because if you have such a strong angle, I'd probably use tighter ones. The 3 and 8 are good if it's a bit more, let's say, the angle is a bit more around, what is it, 4 o'clock, and this is a bit more at 5 o'clock. Well, in any case, either this one, if you use faster moving averages, the red dot would be the entry. If you use the 3 and 8, then still an entry in one of these candles would have been just as good, in fact, and you still get the follow through. So obviously this is a great way to catch some potentials for trend follow through. Do want to trail stop the trail stop, because here was an entry, for instance, and you want to limit the risk if you got natural tops here, right, to reduce the risk. And you see that would be good because you got the spike up. Now the environment is changing. You can see moving average and flat, they're actually getting a bullish angle to it, right? So that's looking differently. Now here you see price moving above it. That's still a very short break, so this is not the best one. Here you see price moving further, but you get the move back, but without a bounce, right? This is the better one here because you get a break, you get a pullback and a bounce, and price stays above the moving averages. So this was a better breakout. But it requires a bit of patience with the hourly, or monitoring more pairs, because now, for instance, the price is far from the moving averages. So what it requires is price to go back up, hit the moving averages, move down again before there's a potential trade. So yeah, sometimes that does require patience, but that's with a lot of strategies. But that's sometimes a bit of an advantage when using an hourly. 15, because you have maybe also some intraday potential. So Euro yen looking bullish. Let's see, we got a question from Peter. Thanks. Do you have an EA for the moving averages? I don't have an EA, but I think it would make sense. I'm just not a programmer myself. Would be cool though. I don't know if you know anyone, let me know. But unfortunately not. I think it would be very interesting though. Sorry for that throat all the time. I don't know why, but my throat is acting up this morning. So I guess if you have any questions, first of all, let me know. Otherwise, I'll be waiting for the Euro yen to finish anything like that and wait for a pullback. Maybe let's put a fib on this 15-minute, the 38.2 or the 50. I wouldn't expect more than that. 138.89, 138.86. I wouldn't expect a deeper one than that, but could be, of course. That's why it's always better to put the stop loss logically, in my opinion at least, preferably below this bottom. It's anyhow relatively not a big stop loss. If it does take too long to continue up, and you see it move down and it bounce, and this is taking 5 to 8 candles on a 50-minute chart, going sideways, Yeah, I would then get rid of it because then probably it's just making a bigger consolidation. Then really we don't know what's going to happen. It could be a bigger correction first, for instance. In the meantime, this euro yen is pushing a bit further than I was hoping for, but does does show its bullishness. TP, let's see. Probably the minus anywhere. Well, one level could be the daily R2, 139.18. The other one could be the H5 at about 139.40, which is also the weekly R2. So maybe 139.20-ish, 40-ish. And using these fractals to reduce risk and lock in profit eventually. And eventually, if the trade is at the H4, then there shouldn't be a deeper pullback back to this level. So moving it to break even at that point in time would make sense. I'm just scared that this is not scared, but looking at the bullish close that we're potentially getting, that, well, let's see, still 6 minutes to go. But I wouldn't jump in here now because it's right at the high. Just obviously it would be nice to get a bit of retracement before it continues. We never know though. So if it doesn't do that, as I said, then an entry order above this top would be the solution. That does increase the risk pretty big. So, you know, the R2Rs are looking a lot less favorable than an entry at the 50 fib. That's why the 50 fib would be a lot better, obviously. So, you know, if you doubt about that part of the plan, I can imagine, then skip the entry order here. Look for the break. Look still for the hook back, and try to just wait for the pullback instead. If you want to increase those R2Rs. So that, you know, there's nothing wrong with missing something necessarily. There's always, it's just the early beginning of the day, in fact. So there will most likely be more setups to come today. And basically, you can use the same principle for all time frames. That really is it's not an hourly or 50-minute strategy. I mean, if you want to trade the 4-hour, you could apply the same theory for that idea. Let me show you. If I get, okay, good. So here, for instance, one second, folks. Alrighty, let's see. We have price moving under the moving averages. We see it go up and hook back down. So the same theory, let's see, breakout, in fact, here and here. You know, sometimes you see that quite often, in fact, two breakouts. The first one, we never know if the first one really will go or not. Sometimes you see a breakout and then a pullback, and then the next breakout, the continuation, in fact, you see the bigger follow through. that potential is always there, like here, for instance. And then the second one falls further. Then you get a retracement back to the moving averages. And here two continuations. In fact, 3, depending on how you look at it. Basically, this was just a consolidation that sometimes happens within the downward moving averages, though. Then eventually you get the fall. Again, pull back, bounce off the moving averages, another fall. Here too, in fact. Then the character changes because price retraces back to the band but doesn't break below it. It just keeps on going through the band. And that is, of course, the first clue that the sentiment, the role is changing. We had the same here, right? Price moved back to the band but didn't break below it. So you didn't take any, I wouldn't take any shorts here because price is at the moving averages but didn't confirm the break below it again. Same here. Price moved back to the moving averages but didn't bounce above it again. So no longs. That's good because it obviously avoids bad trades. So once you get the break above the moving averages and price hooks back to it and then bounces above it, this is where longing areas are good again. Right? You're going to have, of course, the 4-hour chart is going to require even more patience than the hourly because we're looking at large time frames. But if doesn't mean it doesn't have the same validity, in my opinion, as the hourly. It's the same idea, it's just on a higher time frame. So maybe for some, this is a better way of looking at it because of time availability, for instance, right? So what would be the potential entry? There are various entries possible, but one way of doing that is waiting for price to close above the band and wait for the 3 to cross the 8. Once that has happened, you can take a long. So I'm not sure exactly when the 3 crossed the 8. Let me check. It was very close. It was like less than a pip difference. But so therefore, technically, officially, that candle was here. This one, because the one before that, although it's very close, it just missed it by a bit. So that would have been the one with the stop loss below the bottom, right? And you can trail stop this, have TPs, trail stop the 4-hour fractals, and in that case, this fractal would have been the one to use, plus the exit just a bit below that. Here could have been another one. Here too, in fact. This one would not have worked out that well. Here too. Obviously, not all of them are going to be good. There are going to be reasons why sometimes the entry is not optimal. You want to keep an eye on divergence, for instance. Is one way of being cautious of that. We see that this particular entry, for instance, although we had a grand AO, right, a very strong AO, we also know that we didn't get back to the 0 line as yet. You see, this is moving back to the 0 line. So I doubted that I would be looking for a long in this one personally because the hourly was showing divergence between these tops. So a bigger correction was likely, had a decent chance. Therefore, this one is one I would have filtered out personally. But not saying that we can be perfect or filter out everything, but I think that this one was a decent likelihood of filtering out because we didn't get back to the 0 line. So this is one way of using moving averages. This is a bit more choppy zone in the Kiwi, so still would not maybe necessarily be that bad. Here we see, for instance, a good breakout, and here a breakout above, and even here, that one didn't, the last one didn't do it all too well. Here, and then here again. So some of them go further than others, but all of them have some follow through at least. All right. Yeah, Urian unfortunately pushed even through this top, but Yeah, that was a strong hourly bar and even broke the top. Yep, sometimes that happens. Get immediate follow through. Still wait for the pullback personally. I'll move the fib up. See if we still can get a hook back to 38.2 and 50 fib. We are getting a angle on the moving averages. Will price go there? I don't know. In this case, if it doesn't, then the breakout itself on the 15 was actually the place probably to go to, but not always do we know that or take that particular trade. There's a fair chance that we could back to the 38.2 fib. It would only require retracement of the previous 15-minute candle. I don't think that's too much to ask for, so that would probably be the better thing to do. It could even be worth it right now, but the thing is we do have a 139 round number as well as this top, so that doesn't seem that appealing to me as compared to the retracement, but we'll find out if price indeed does that or not. We never know. Well, folks, that wraps it up for today, I guess, because I don't see any questions. So if you have any questions though about this particular strategy using the 21 EMAs and 3 and 8, this is just another way of tackling the market with regard to let's say breaks, pullbacks, and continuations, and how you could use these tools to to your advantage to dissect whether there is a good breakout or not. If you have any questions about that, let me know. We'll be back tomorrow with and Thursday, so no problem to look at that in another session as well. Otherwise, I wish you all a great day. Good July trading. New month, of course, I forgot to mention that. This is the first day of the first month as well, so that is also, by the way, something to be aware of. So it's not an easy week with NFP Thursday, by the way, the first day of the month, interest rate, day off on Friday, at least for the U.S., which, of course, will quiet down the later part of the Forex day at least. So, but in any case, I wish everyone good July trading. Maybe next week will be a bit easier, and see you soon. Cheers.